Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 14th of September. All right, now as we go through the start of the open of the Asian session, still the weekend for many of you, the US dollar index closed last week pretty much trading sideways. Okay, there was no sort of clear resolution whether the dollar was going up or down, and there's building two sides of the market here, as in those that are extremely bearish dollar and those that think it'll slowly bounce back. So we'll see how that plays out. But just having a look at the news, right? Good time to look at the news on a Monday after the weekend. Some of the headlines here: Euro gains as ECB viewed as less worried about strong currency. I can tell you the ECB will be extremely worried about the value of the euro going up. Makes them extremely uncompetitive, and also it just makes it a lot harder to get some sort of growth. They will not come out until it's necessary or it's panicky and say that it's overvalued, right? That's just a given. So the news service to say that they're less worried, that's a load of rubbish. I wouldn't be reading too much into that. Now, sterling is the one pair that has been taking a nosedive. Now, for me, it's two reasons. There's a bit of a Brexit impasse, okay, trying to work out a deal with the EU. But also the number of coronavirus cases in the UK has just ballooned over the last few days, or last week. So that's going to create further lockdowns in the UK and slow growth, et cetera, et cetera. So sterling getting hit on two fronts is the real thing. The rest of this, obviously, there's some bushfires, some massive fires going on in the States. That's along with the usual political mumbo jumbo between Trump and Biden. But, outside of that, it's, as I said, there's an article here about the dollar's bearish technical outlook, but we'll wait and see how that pans out. Now, just give you a look at the major currency pairs, where they finished last week. Now, there was once again, at the start of the week, plenty of prospects. At the end of the week, though, they all pretty much finished right in the middle of recent ranges, except for obviously sterling, which is the one pair which has clear direction. Dollar yen back in the range. We saw that big correction in dollar CAD, but it's now found fair value around 130, 180. So it's all to play for. What we need is now, when the currencies go back into a nice sideways sort of look like this, what you're looking for is news to sort of change the general direction or provide momentum, right? And that's where you come back and you start to look through the calendar and piece together the key bits of data that we may have a look at. Now, just give you a run through the daily market insight. As I said, the major direction here, not very clear. Sterling, the standout. There's no major support levels. We do have a resistance level, but it's a decent way off. So it's pretty tricky to get into that. And if you come down, have a look, just a good time, regardless of what calendar you look at, just go through and have a look where the key events are coming out. We've got obviously some data out of China coming into Tuesday. We've got the UK employment numbers. Well, that's going to be interesting to see how that plays out. To me, the economic sentiment numbers are ones that we want to keep a very close eye on. So we've got the German zoo numbers there coming out Tuesday as well. Some industrial production numbers, CPI out of the UK, retail sales, CPI out of Canada. Now, obviously, the main event will be the Fed. This will probably slow things down coming into, Tuesday, right, as the market sort of comes back and sees, tries to assess what the Fed's going to do. Now, I think the Fed's done everything they can, and they've said everything they could possibly say. So I don't know if this, it's always a massive event, and you've always got to stand back and have a look before you rush in. But I don't know if there's going to be a lot of new stuff coming out. I think after the Fed meeting, we'll have we may have a clearer view on the dollar, and that sets us up for some of the more robust numbers. Like we've got Kiwi GDP, Australian employment numbers, and then you come into the Bank of England rate and statement. We'll see what the Bank of England have got to say. Now, with this Brexit issue hanging over the UK, I think these guys will be saying, like us, we want to see some sort of what deal comes out of that before we do anything else. And then you come through the end of the week. Once again, you get a bunch of numbers, retail sales figures, numbers that would usually give us a bit of encouragement as to where momentum may start. Okay, but obviously in this sort of current environment, it's very hard. It's very fickle. One key thing too, when you're looking at the, if I just change over the risk page, don't forget, to me, there's a bit of a transition here with the US equity markets. If you haven't already noticed, right, the NASDAQ, right, or the stock, or the tech stocks, I should say, are the new fad, right? That's where all the money's going. So to me, there's a bit of a transition here. We've got the Dow Jones, slightly up, and we've got the NASDAQ slightly down. To me, I'm going to start focusing on what the NASDAQ is doing, right? Because that's where all the cash flow is. And there's a lot of money going into tech stocks, and everyone's piling in as the tech firms start to rake in the dollars with all these lockdowns and the whole global change of things. So just keep an eye on that as we go through the week. You want to sort of, don't get sort of fixated on one or the other. We need to keep an open mind, but look what's directing what. And that's where the real flavor and direction will come from for the currencies. The sooner you work that out, the sooner you can find the better trades. All right, guys. Well, that's it. Not much else happening right now at the moment. The start of the NFL probably distracts a lot of traders out of the US, but we'll see how the week plays out as we go forward. All right, guys. Have a good one. Cheerio.